Good morning and welcome to the street on BNN Bloomberg. I'm Roger Peterson. Coming up on the show today, Greg Newman, Senior Wealth Advisor and Portfolio Manager at the Newman Group, Scotia McLeod, is joining us. And we want to hear from you this morning on First Call. You can reach us with your questions on stocks, and we'll have Greg answer as many of those questions as he can. The number to call, 1-855-326-6266. We'll open the phone lines in about 30 minutes. And, of course, our email address is firstcall@bellmedia.ca. Now, some of the stories we're tracking for you in the BNN Bloomberg newsroom. Prime Minister Mark Carney is expected to unveil plans today for a new oil pipeline deal in Alberta. The Alberta government has been negotiating with Ottawa to allow the proposed Pathways Alliance project to move forward, along with a proposed pipeline to the West Coast. Carney vowed to make Canada an energy superpower, but a 2019 tanker ban is blocking a new pipeline from being built. Ottawa has yet to say whether it would end the ban. Rogers Sugar beat estimates for profit and revenue in its latest quarter. The Montreal-based sugar company attributes the numbers to disciplined execution and consistent demand from customers. The company says it is focused on expanding its refining and logistics capacity in Eastern Canada to support evolving needs for customers. Aerospace company Airbus says it has successfully captured carbon dioxide in its Alberta facility through new technology developed in partnership with Montreal-based Deep Sky Corporation. Carbon capture technology will help offset emissions for airlines that have signed carbon removal contracts with Airbus, including Air Canada. Ottawa offers an investment tax credit for direct air capture projects. And now our top line story. A new Alberta to West Coast pipeline framework is expected today as Ottawa works to ease concerns within the party's BC flank. CTV's Abigail Beeman has more.
What's your message to BC MPs concerned about the pipeline?
The Prime Minister isn't saying much on potential caucus discord over a pipeline to the BC coast. An agreement with Alberta is expected to be announced Thursday.
We enjoy a very open and engaged dialogue.
Very good conversation.
And few words from the Energy Minister, who started his day briefing those BC MPs on what's to come.
Were you reassured by Mr. Hodgson this morning?
I was.
Details on both the meeting and what's in tomorrow's announcement scant.
It's premature, irresponsible for anybody to talk about, what people think and who's saying what until there is something that's on paper.
With some MPs, including the caucus chair, insisting everything is fine.
I support the Prime Minister, and Prime Minister has a vision, and something really good will come out of this tomorrow.
Everybody's happy, honestly.
Are you going to leave caucus?
But the former Environment Minister wouldn't answer when asked multiple times if he was mulling over quitting. And many BC MPs wouldn't stop to talk. This pair, including Vancouver's former mayor, walked by silently 3 times.
Mr. Robinson.
You've got BC bought in, you've got First Nations leadership bought in, and First Nations communities bought in is the minimum expectation.
In addition to any pipeline opposition that may or may not be bubbling inside caucus, it very much exists among coastal BC First Nations and BC's premier, who said it's unacceptable his province hasn't been involved in the talks.
All right, that is CTV's Abigail Beeman, and of course the announcement is coming today. Let's bring in our guest co-host, Greg Newman, Senior Wealth Advisor and Portfolio Manager at the Newman Group, Scotia McLeod. Greg, thanks as always for joining us.
Yeah.
An interesting morning ahead, lots to figure out and see what we're going to get out of this meeting or this announcement. Are you optimistic that we'll see a pipeline?
We thought we were going to have a fairly quiet Thursday. Thursdays on
Thanksgiving.
Thanksgiving. It's football. We're not supposed to be. It's supposed to be a bit of a push day.
Yeah, never politics at the dinner
on
table, right?
Bay Street. Yeah, but look, it's a bit of a showdown. I mean, it looks like Carney is laying down his vision. We don't really know what's happening yet, but we're going to be finding out a little bit later on today. I think it's an imperative. I think it's a necessity. I think that we don't have enough energy yet to do without clean energy and getting natural gas offshore. And Canada should be a beneficiary of that. I believe it's, there's conversations on both sides, and we need clean energy and we need a clean environment. But we need this. This nation needs this. And I think that it's meritorious. And therefore, I think in the end, it'll go through. But listen, you have a lot of opposition from BC, from other people, who have interests, Indigenous. So, stay tuned.
And politically, this is a tough call for the Prime Minister, you'd think, because he's got the Liberals in Liberal MPs, not just the government in BC, saying, hang on a sec, this could kill us. And they barely have, they're close to a majority, but they don't have it yet.
Yeah. So
any kind of an election, they could get hammered with that, and they wouldn't necessarily make up those seats in Alberta with this.
It's very interesting because, Carney had his book, right, that he wrote, and he is a champion of the environment. And that's kind of where he comes from and how he's defined himself. But we're in a different time. When he wrote that he wasn't prime minister, he wasn't anticipating to be prime minister. He wasn't in a world with Donald Trump and with all these new trade deals. And so things have really, history sometimes takes you and shapes you. And I think great leaders have to pivot and have to respond. So let's see what happens. But I am confident that Canada does have to get busy. We have to do the things that we're good at doing, and one of them is
oil.
Is oil and getting it offshore, and gas.
Is there a business appetite for this pipeline to build it?
Well, that is a very good question. I mean, shareholders have been so stung. And, you take a look at TransCanada Pipelines. It was trying to get this off, I believe, in 2012. And oh boy, did they pay for it. And they've all moved on now. They've moved on to other projects, and they've all got very good visibility, and they're all trading at the highest multiples that I've seen in years, with great dividends and great dividend growth. And they're even plugged into the data center theme, So do they need this, and will they take this risk on? I really don't know. I mean, maybe there could be some deals going on, and we're going to get some announcements there. But, just like Trans Mountain, in the end, the government had to come in. So I think that there's going to be some combination of very powerful government incentives to get any private sector involved.
I guess at the right price, anything's doable, right?
Well, that's true. Yeah, absolutely.
Okay, well, we'll have to wait and see. We'll get the details later. Of course, we're going to be talking to Alberta Premier Danielle Smith coming up this afternoon in the 1 o'clock hour. But we're going to take a look at the markets before the bell as we head to break. See how things are shaping up on the markets right now. We'll start with the U.S. futures, and it's pretty quiet right now, off ever so slightly, all three of them. Of course, the markets will be closed today for the American Thanksgiving and the football fiesta. In Asia, bit of a different story. A couple of washes and one nice day for the Nikkei. It was up 1.23%, but the Hang Seng up just barely. The CSI 300 down just barely. Moving over to Europe now, it's muted there after several days of gains. Investors digesting recent rallies, and of course the focus on the Fed rate cut or potential of a Fed rate cut in the U.S. The FTSE 100 off ever so slightly. The CAC 40 up by about 0.2, and the DAX up by about 0.3. And the TSX in record territory and finishing at a record high, I should say, yesterday again. That rally now carried into a fourth day. We'll see what happens today. It was driven by optimism over that potential U.S. Fed rate cut and strength in the tech and materials sector. It closed up 0.9% at 31,180. And some of the winners and losers yesterday, a lot of the mining companies. Gold and silver up almost 13.5%. Endeavour Silver up almost 10%. Going the other way, Linamar down about 2.1%, and IA Financial off by 3.25%. Taking a look at the metals now, they're all off slightly, but not by much. The gold is down by 0.4%, silver off by 0.1%, 0.2%, and the copper off by about 1% right now. And looking at oil, yesterday was an upturn for Western Canadian Select. It was up 1.37 0.5% to 45.90. Of course, oil trying to feel out the recent geopolitical developments and, of course, the upcoming OPEC Plus meeting. And taking a look south of the border at WTI, it is up after dipping below 58, back up over 58. Let me check it back above 60 now. It's up 0.34% right now. Amid the ongoing trade war with the United States, Prime Minister Mark Carney has announced a slate of new measures to help protect the steel and lumber industries. CTV's Judy Trin has more.
The steel industry is teetering after half a year of enduring 50% tariffs imposed by Donald Trump.
Our order books are not being filled up at this moment because nobody's investing. It's such a real perilous time.
The new measures aim to further reduce the amount of foreign steel.
We must protect our workers and our industries who are most exposed to U.S. tariffs.
For the countries that Canada does not have a free trade agreement with, suppliers like China, Taiwan, India, Turkey, and the United Arab Emirates, they will now be limited to 20% of what they sold to Canada in 2024. The government estimates that could boost domestic steel sales by $850 million. Other countries with free trade agreements will be capped at 75% of what they sold last year. U.S. imports won't be capped, but all American steel products will face the 25% tariffs Canada previously imposed. The government will also subsidize the cost of transporting steel and lumber across provinces by rail.
The second broad way to drive transformation of our strategic industries is by becoming our own best customer.
To push Canada to buy from its own producers, the government will end remissions to companies hurt by American steel tariffs. The opposition leader criticized the measures.
He promised he'd negotiate a win with President Trump with a deal by July 21st. No deal, no win, no elbows.
Mark Carney says he'll see Donald Trump next week in Washington when he's there for a FIFA World Cup event, not to discuss trade. Carney says the U.S. has yet to indicate that it wants to resume talks.
And that was CTV's Judy Trin. Let's bring in our guest host, Greg Newman, Senior Wealth Advisor and Portfolio Manager at the Newman Group. Scotia McLeod, talk a little bit more about this. They're having a little chat next week. They're talking soccer. I think they may talk trade, too.
You know what?
I can't see Trump not saying something.
Listen, I think this is good policy. This is not going in until end of December, I think.
No.
So, this is definitely something that can be negotiated and can be used as a bargaining chip. Meantime, I think our steel stocks yesterday started a rally. I think Algoma was up about 6%. I think Russell was up about 2.5%. There's really good value in a name like Russell Metals independently. Take all this news away. It's one day a takeover target. It's trading at a cheaper multiple. They've bettered themselves so that they can make it through cycles. Their balance sheet is pristine, acquisition story. It's an interesting play, something like a Russell Metals with a nice dividend for an investor to be buying here in any event, regardless of which way this goes. But I have a feeling if this stays on, that's a win. I mean, that's gonna help us. But this is probably a gateway to an ultimate deal and a grander package with the Donald.
I know. Do you think, though, it's not running the risk of raising his wrath again? We dropped tariffs when he got mad, and we brought tariffs back in.
Yeah, no, that's a great question. And you're asking me, an investment
I know. I'm just getting your thoughts on it.
No, and I appreciate it to get inside the man of the mind of this man. But listen, I don't think that this is the kind of thing that's going to be prickly to him for whatever reason. Just observing Trump for years.
Yeah.
Not an expert at that, of course, but I think advertisements and stuff like that are going at the American public is going to irk a guy like Donald. I think the fact that we're just trying to protect our steel business and to be able to sell to our military, I think that will not affront him.
Yeah.
I think that is cool bargaining and jockeying, in my view.
And it does feel like this is just going to carry through until the CUSMA negotiations or the USMCA negotiations, whatever word you want to do. Start up next year. It feels like we're just kind of riding it out right now until those start in earnest.
Exactly. I mean, so much has changed, and but meantime, you do have this impact to this group that needs to be remedied. And, again, I think that's a good decision by our present government.
And now, with it looking like it may go on for a little bit, for a while yet, what other opportunities do you see? You were talking about Russell.
So listen, it's a big market out there, and I'm not really looking at the steel stocks so much. I want mostly stocks that have tailwinds and not headwinds, and that's a little bit murky. But listen, there's a ton of names. Well, there's not actually a ton of names, but there's maybe 10 or 12 names in the TSX that have been really sold down here on tax loss selling because it's been a bumpy year. People have taken a lot of gains. They're going to own a lot of money next April. So, so they're looking for the few losers, and they're just dumping those losers. Yeah. So, really good buying opportunities.
Okay, we're going to be talking about that a little. Okay. I don't want to ruin the Christmas gift. We're going to be talking about in the next segment. Just kind of stay on with the steel. But you feel, for the most part, that Trump is going to kind of let this ride. And
I think at the end of the day. I don't want to be too political, but he's a lot more, he says a lot. At the end of the day, he's a lot more reasonable. He realizes that we have to protect our jobs in our industry. Yeah. Okay. Yeah, this is reasonable.
All right, we'll leave it on that. And we're going to be talking about tax loss selling, which you started to get into. Coming up after the break, Greg Newman is with us this morning and why it's on his radar. All right, time to see what's on the radar for Greg Newman. He is the Senior Wealth Advisor and Portfolio Manager at the Newman Group, Scotia McLeod. And Greg, right now you're focused on how to harness the tax loss selling phenomenon.
Right. Well, we're always looking at where's the edge? Where's kind of an easy place to be putting money to work on a relative basis? This time of year, people are looking for ways to keep the accounts going higher and to pay as little tax as possible in April. And so a lot of people triggered big gains because this was a very bumpy year. And people thought maybe Trump's policies would end up being recessionary, right? So they took a lot of money off in March, April. So now they're looking, okay, what can I sell that's down to cover these losses? And there's not too many areas that are down. But those that are, people are crowding into and just dumping. So you get names like TELUS into $18.30. You get names like Cargojet that are coming down to like irrational levels. Mm-hmm. So if you sold these, you can't buy them back for 30 days to take the loss. But if you didn't sell these and you're just coming and putting money to work, boy, you could really go shopping. There's names, as I say, Cargojet, Air Canada, Propel, Go Easy, BCE, parent of this network. TELUS, Methanex, West Fraser. I'd throw even ATD, Alimentication Touchcard in there, Transforce, Rogers, a whole list of good quality companies that, all things being equal, once this hold down phenomenon goes away into all things being equal, those are the magic words of the market.
Always is.
By January 15th, they're going to be 10% higher. So if you get a 10% lift from just the taking away of this suppression, and you add on a real nice dividend, let's say in the case of TELUS, 8%, you're looking at an 18% return a year out before the stock even does anything for you. So every time sometimes, and if it's been a lousy year, this phenomenon won't be as easy. But with a year like this, where a lot of gains have been triggered and there's few areas, it's even more exaggerated.
And how much do you move?
How much money do you put into stuff like this?
What do you, when you're at the end of the year here now, what are you doing? How much are you moving? How much are you?
Oh, okay. Well, it really is, it varies. Each different client, each different person is nuanced. And look, anything can happen. I mean, what I'm saying is true. However, we could have really lousy markets going into, because the Fed doesn't lower rates, for example, or the economic data starts coming in sloppy, and then who knows, the case for stocks goes down. So it's always got to be all else equal. But, I'm thinking new money, new portfolios to be placed in equities. And how much goes into stocks like this? Once again, it depends, but a decent chunk, because these are meritorious names.
Yeah.
These are not like, you can do this also with names that are very lower quality, like a D&D, for example, that have really sold off.
Yeah.
And you're probably going to get real pop, but I don't know that I really want to hold that long term. I don't, but every stock that I just mentioned is a long term, not an if, but a when thesis. So even if I'm wrong about this, eventually
You'll be right.
they'll be good, and they're already at long term good value.
Okay. And you expect the rally to continue through the end of the year?
I do. I mean, I think that, first of all, you just had, because you had this April meltdown, a lot of money managers sold, and they're behind, and they need to do better. So there's a performance chase to year end, which is a phenomenon. You got S&P earnings that have hit a new all-time high. You got strong bottom line beats across the board, top line beats too. Small caps beat for the second straight quarter in a row. There seems to be no end in sight with rising profit margins. So when you put all that together, any sort of pullbacks here should be very short and shallow. And I think that's the script until you start to get AI exhaustion, which I don't think that we've had yet.
It doesn't feel like that's happening at all.
Well,
we saw it for a minute, and then it feels like it's gone again.
Listen, you have, very smart people like, who's the guy, The Big Short, Michael Burry, who, is seeing problems. And of course, he's getting out of his funds and he's selling newsletters now. So, the question is motivation a little bit. And then you're seeing, alternate chips come out from Google that Meta is going to be buying. So at some point, these guys are going to be right. But I don't think it's there yet for a whole bunch of other reasons.
And it has been an unusual year because we didn't have the September drop off at all.
Yeah.
But then we had November it was shaping up to be one of the worst in 17 years, but now it's kind of bounced back.
Yeah, when everybody declared victory and thought, okay, we are off to the races and the markets are just going to keep going, that's when, of course, we started to have, struggle and have some trouble. And, that was all about the Fed. Because, look, if there's inflation, the Fed can't go. Yeah. And we were, the U.S. government was locked down, so we didn't have that information. So it's an imperfect, but the latest bits of data do show a softening in the United States. And, the expectation of a December rate cut now has gone up to 70%. Yeah. And that's better. And I think that small caps are rallying. They're seeing something. The Fed's probably going to do its magic.
Okay. We'll leave it at that there. Still ahead, the American markets, of course, closed today for Thanksgiving, but instead of reaching for wine at dinner, more Americans are opting for a different kind of buzz to go with food and family. We'll have more on that after the break. And, of course, our phone lines will be open soon for our first call segment. Call us at 1-855-326-6266. Send us an email at firstcall@bellmedia.ca. Prosper Canada and Ottawa are investing more than $48 million in new funding to 97 community organizations across the country to bring financial supports for those with reported low to moderate incomes. The funding will be issued over the next 4 years and deliver services including tax filing, benefit assistance, financial education, coaching, and counseling. Rogers Sugar beat estimates for profit and revenue in its latest quarter. The Montreal-based sugar company attributes the numbers to disciplined execution and consistent demand from customers. The company says it is currently focusing on expanding its refining and logistics capacity in Eastern Canada to help support evolving needs for customers. Shares of Puma are trading sharply higher after speculation of a potential takeover from China's Anta Sports. Bloomberg News is reporting that Anta is working with an advisor to evaluate a bid and could team up with a private equity firm if it moves forward. Other potential bidders could include Chinese apparel Li Ning and Japan's ASICS, according to Bloomberg. And looking at the markets, you can see it's pretty quiet right now. Pretty much a wash across the board there after a nice little rally we've seen over the last few days, and heading into the American Thanksgiving, the markets will be closed today. More Americans are opting for a different kind of buzz to go with food and family this Thanksgiving. As state laws around cannabis have loosened, it's spread into everything, including holiday dinners in California. Bloomberg's Charles Gorvin has this report.
More Americans are opting for a different kind of buzz this holiday season. As state laws around cannabis and other drugs have eased up, it's spread into everything, including the holiday dinner table.
It's more accepted. It is becoming more normalized.
Cannabis's newfound place at family functions speaks to how far the category has come. The move fits the lifestyle of people who describe themselves as California sober, abstaining from or barely touching alcohol, but open to substances like cannabis or psilocybin. Alcohol consumption has fallen to its lowest level in decades, according to a recent Gallup poll. Over half of respondents to a recent Bloomberg Intelligence survey said they now substitute cannabis for alcohol at least weekly. That might take the form of gummies, extracts, and even infused seltzers. Cannabis on Thanksgiving is a quiet tradition for some. The day before Thanksgiving is the second biggest sales day of the year for the US legal cannabis industry, behind only April 20th, or 420, which is the de facto holiday for cannabis celebration. The industry was valued at just over $30 billion last year, according to industry estimates. The cannabis market tracker BDSA forecasts growth in the total market this year of 4% to $31.6 billion. It expects the market to reach $39.1 billion by 2029. For the big Thanksgiving meal, some chefs are getting experimental. Miguel Trinidad, a New York-based chef and founder of the cannabis dining club 99th Floor, is infusing THC into his Thanksgiving menu.
Our mission statement at 99th Floor is to destigmatize cannabis through the language of food. The way I do that is by micro-infusions. What I'm making today is going to be a rack of lamb.
Trinidad infuses lamb fat and clarified butter with cannabis flour before sealing and cooking the lamb sous vide, a slow water bath method that keeps the meat tender and evenly cooked. He then finishes it off in a scalding hot pan.
So here you have it, the infused rack of lamb. It's 5 milligrams of THC. Over the course of the time that I've been doing 99th Floor, things have changed. There's a lot of people that are coming out of the cannabis closet. It's something that's becoming normalized, and people are starting to understand and respect it more.
While a few dozen states have legalized cannabis, it's still considered a Schedule I drug, putting it in the same category as heroin and LSD. Uncertainty at the federal level looms large, limiting access to banking, investment, and broader legitimacy. In August, President Donald Trump said he was considering reclassifying cannabis as a less dangerous drug, but no announcement has followed. The divide between state legalization and federal prohibition remains one of the biggest hurdles for an industry still finding its footing. In the meantime, the cultural shift is making its way into some holiday dinners.
All right, that looks delicious. We're going to stay on the food theme. Startup Foodini is using AI to help restaurants identify ingredients that could be allergens. We'll get more on that in a minute as well. Our phone lines are open. Greg Newman is taking your questions. Call us at 1-855-326-6266. You can also email us, firstcall@bellmedia.ca. Like many founders, Foodini CEO Dylan McDonald's idea came out of a place of personal need. Startup Foodini is using AI to help restaurants identify ingredients that could be allergens or restricted under certain diets. McDonald sat down with Bloomberg Tech to explain how the tool works.
I diagnosed celiac when I was 10 years old, and so have a lot of personal experience navigating dining out of home and ordering online while needing to know what's in my food. And just over a long period of time, got more and more frustrated with how difficult it was to get that information and mistakes and inaccuracies, and decided to try and do something about it.
So how can AI actually help restaurants do this? Because, you know, when you do look at a menu, when you do talk to a server, I feel like in this day and age, they have a good understanding of at least some of the most common allergies, like gluten, for example, in people who have celiac. So what does AI allow them to take a step further? How does it do that?
Yeah, it's a fair point. I think you're right. I think a lot of restaurants have got on top of gluten-free, vegan, vegetarian, the main ones, but there's 173 million Americans who have some form of food allergy or dietary requirement. And the allergens go far beyond just, gluten and vegan. And so what we do is we help restaurants by ingesting their menu information, their recipe information, and the product information. And we have trained large language models to break those down to the ingredient level, tag them with the correct allergen and dietary requirements, and then we're able to power a personalized menu solution whereby consumers can see exactly what they can and can't eat on the menu depending on their personal requirements.
You have a background in law, you're a former corporate attorney, and I wonder about the liability element here. Mistakes happen, mistakes get made, AI, LLMs hallucinate. Well, how do you protect around that, and how do you make sure that even if a food says it doesn't have something, it doesn't become contaminated somewhere with that ingredient process?
Yeah, it's a great question. Firstly, on hallucinations, our technology never guesses. If there is, it's based on structured ingredient and supplier data. If there's ever a scenario where it isn't sure, it will tag in the back end for us that there's uncertainty, and our dietitian team will come in over the top and do QA and manually intervene. And as they make inputs into the system, the LLM learns and gets smarter and smarter over time. From a legal liability standpoint, we would argue that not having any documentation on allergens is a much higher risk, because right now you have a member of staff who's likely not trained on all the ingredients and all the allergens and all the menu items, and they're the line of protection for the restaurant between the consumer and a potentially life-threatening incident. And 54% of all allergic reactions in restaurants occur after the staff have been notified. Wow. And so that tells us that the current system of dealing with this by word of mouth isn't working.
So Dylan, how does it work? Is it a two-sided market where you have to get the restaurant or the restaurant chain to add your technology, but then also get people who have these allergies to use it?
Yeah, so we partner with the restaurant chains, food service operators. We ingest their menu, recipe, product technology from various tech stacks. And then how it works typically is they put a QR code in venue on physical menus and menu boards, and a digital link on their website. This is the most basic integration. And then when consumers come into the physical environment or digital environment, they scan the QR. It prompts them to create their dietary profile where they can choose from over 150 different allergens and dietary requirements. And then instantly it will show them, here's exactly what you can eat. Here's what you can eat with a modifier and what that modifier is. And here's what you can't eat and why. So it's completely personalized based on their requirements. And the consumer discovers this in the restaurant's environment. Senate
Bill 68 in the state of California, this is effective next week. It's going to require major chains to provide detailed allergen info. Many people argue this is a major step toward transparency. How has that increased adoption of your product?
Yeah, so just on that, it was signed by Gavin Newsom a month ago. It becomes effective 1 July 26. And so what it in essence requires is every restaurant chain and food service facility with 20 plus locations nationwide, where at least one of those is in California, to label all of their physical and digital menus for the major 9 food allergens. So this is obviously a major step change for restaurants. They can do it one of two ways. They can either physically annotate every one of their menu items with those allergens, or they can use a digital, like a QR code that links out to a digital allergen menu. And that's obviously what we do. And from speaking to a lot of the bigger chains recently, as you might imagine, their strong preference is to use a digital mechanism. And so we're getting a lot more inbound than we certainly were a few months ago, which is fantastic. But we continue to work with, like I said, with independents, chains, food service facilities of all types.
Coming up, Ottawa through the beleaguered softwood lumber industry, a bone. We'll bring you more on that after the break. We'll take a look at some of the notable analyst calls and recommendations. Stay with us. Okay, let's take a look at some of the notable analyst calls and recommendations. First up, BMO Capital resumed coverage of Brookfield Renewable Partners with an outperform rating and $36 price target following its equity offering. In a research note, the analyst tells investors, while dilutive, the capital raised is not a surprise given the recent unit price appreciation and higher than expected capital deployment. And moving on to Novo Nordisk now, the Handelsbanken cut the recommendation on Novo Nordisk to sell from hold, setting a new price target to 285 kroner, implying a 9.3% decrease from last price. For more, and let's a little reaction to this, let's get Greg back in here. He's a senior wealth advisor and portfolio manager at the Newman Group, Scotia McLeod. Which Brookfield first? Your thoughts? Which one would you like to do first?
Well, Brookfield.
Okay.
You know, you got two different companies here. One of them that's really at the top of its range that just, you know, cashed out a little bit just to get some equity is prudent when you have had that sort of stock appreciation. And the other one who's really, you know, on its belly and really had a hard time. You know, the Brookfield Renewable couldn't get out of its own way when Trump got in because this is a renewable play and everybody forgot about that. And then the data center thirst came out and you know, now they're building nuclear plants with Cameco. So there's this incredible buzz about them. This BEP.UN is a great company. We like it. Don't know that I'd be, well, actually, if it's off a few bucks, I'd buy it a little bit lower, okay? It's a little bit higher than it ought to be, but pays a great distribution, great growth, and real quality company, and one of the best places to be in the renewable space, which is a very enduring long-term theme. So we like it, we own it, add to it, but a little lower price. Novo, I don't like it. I just don't. Like, I mean, I think Lilly has got the better product. Lilly's got Mounjaro, and Novo's got Ozempic, and Mounjaro apparently works a lot better.
They've moved ahead, have they not?
Well, they moved ahead, but I mean, like in studies, why would, if you're going to spend the same money?
Yeah.
You know, one I think gets the goal by a factor like maybe, I don't know, it's discernibly different. So one product works better than the other. So I don't know where Novo Nordisk goes. I mean, maybe they got to innovate but even if they're doing like the pills that, you know, you swallow instead of inject, it's an inferior product. So
and we haven't heard about anything in the pipeline from them, have we?
No, I haven't. So that is not a stock that I'd be owning. A lot of people have been hurt by it, you know, that's one that I would take a capital loss on, and I'd put the money into Mounjaro.
Okay, we'll leave it on that note there and talk a little bit about the beleaguered softwood lumber industry. Ottawa throwing in a bit of a bone with Prime Minister Mark Carney announcing new supports for both it and the steel industry. CTV's Andrew Johnson has more.
It's a company that wears Canadian pride on its sleeve, but Leslie Forest Products in Delta, BC isn't sure the federal government has its back.
It seems like they're more focused on, you know, the issues back east, you know, whether it's energy or, you know, the auto sector.
James Sangera says the federal measures to help the industry announced today won't make much of a difference here, but he knows what would.
Work out a deal, reduce the duties.
Sangera says his family's softwood lumber business has constantly adapted to survive, but this year has been a challenge.
My dad's never laid anybody off in our 52 years that we've been here. Like, he's always kept the mill running.
The softwood industry has been hammered by a combination of U.S. duties that have tripled and new Trump tariffs announced last month.
Profit margins are so low. Instead of manufacturing fencing and decking out of this wood here, the company says it's sending the wood down to the U.S. unfinished and doing the work there to avoid some of the tariff hit.
That wood that we shipped down there, you know, that would have kept us busy for a couple weeks. We're scrambling to find work just to keep our guys going until Christmas.
The message from the mill is being echoed by advocates who also feel the industry doesn't get the attention it deserves.
I think the announcement today was basically for steel. I think it'd be great if I was in steel. I feel like we're in the moment of Sophie's choice where softwood lumber is going to be the child that's left behind.
They hope that's not the case here, and 2026 will bring some badly needed stability. Andrew Johnson, CTV News, Delta, BC.
And when we come back, Greg will take your questions on First Call. Time for First Call, and we have our first caller. It's Rob from Penetangwishing. Rob.
Good morning, gentlemen. My question is on Allied Properties REIT. It has been absolutely slaughtered in the last month. So my question going forward would be to Greg is this a combination of tax loss selling, perhaps not meeting their occupied space of 90%? So is the dividend sustainable? And would he recommend it as a buy, sell, or hold with a 6-month to 1 year outlook? Thank you for taking my call, and I'll hang up and listen.
All right, thank you,
Rob. That's a great question. Okay, so this is a stock that I talked about in September, and look, I was wrong. Their occupancy numbers did worsen. They didn't hit 90%. Stock, the outlook has darkened a little bit. They are selling 2 buildings, which is accretive. Okay, bad news, good news. The bad news is their payout ratio is swollen. Yes, they're going to probably cut their distribution. But I think that that's already in the stock. Mm-hmm. How much of this erosion is also due to tax loss selling? A significant amount. Would I be buying it into this weakness? Yeah, I think occupancy will eventually get to 90%, and the stock will start to do better and become a re-rate after that. But right now, the distribution is probably too high. They're probably going to cut it, and the stock might even rise on that. Or it won't this year if they don't know when they're going to cut it, but it's going to be under pressure for the next month.
Okay.
But I'd be buying it into this weakness, yes.
All right. Let's get an email in. We've got a couple to get through here. Email from Dan wondering if TELUS at this level might be a good buying opportunity. Thought the same about BCE around this time last year, and that didn't work out so great.
Yeah, so all these telecoms have really had to reset to a different level. I think they're at the levels now where you can buy them. I mean, wireless has probably turned the corner. It's going to take a few quarters to really start to show up. We do need some pricing discipline. Freedom's got to cooperate, but we're pretty confident that they will. Look, this stock got a downgrade recently from another analyst, and that didn't help the stock. But it really is getting killed on tax loss selling, and it's over-exaggerating. You do have this 9% dividend or so. You're not going to get dividend growth. TELUS has got to pivot away from dividend growth, and they got to pivot towards getting their balance sheet in better shape. But you're still going to get this very good dividend at this very compelling price. Yes, I think it's a buy right here.
Okay. And we're going to get at least one more email in. This one's from Spencer. Does today's guest like the long-term prospects for Cameco and be a buyer at these levels?
So we like Cameco a lot, and we've been owning it since, $13, $14, $15. We've seen the thesis. It's done incredible. And they're building, I think, 8 new nuclear reactors in the U.S. Everything's going really well, except for the price. Market has it growing at 26%, 2025 to 2028. That's great. 26% compound annual growth rate is very nice. Problem is it's trading around 58 times 2027. So on a price to growth basis, this stock is a little too expensive right now. So I like it. I'm holding it. I'm not selling it right now and taking gains, but I'm not going to be buying more until it comes to a lower price.
And do you see any indicators that it might drop?
It's a pretty hot stock. So it's a momentum stock. And, the real good growth stocks can be expensive. I mean, it's not as expensive as a Palantir that on a price to growth trades 5 to 1. This is like 2 to 1. It's not horrible, but for what it is, I think that you can be a better shopper. Just like you can buy things cheaper in the grocery store. If you want to buy things cheap right now, buy TELUS. If you want to buy things cheap right now, don't buy Cameco right now. You're going to be able to get it at a better price.
All right, we just want to delve off to the lumber, the announcement about the brakes for lumber industry, lumber companies.
Yeah.
Your thoughts on what to look at in that field?
Well,
before we go, we got about a minute or so.
Yeah. So listen, it's certainly been really hurt, and what happened there was everybody front ran the anticipated tariffs. So you got all this excess, all this excess supply. And so that's going to take a couple quarters for demand to burn off. But so you got names like West Fraser that are really good quality, that have excellent balance sheets, that are trading probably at, very expensive multiple. But if you look at where they should be on their earnings next year and the year after on the recovery, very compelling story. So you got to hold your nose. What is West Fraser, around 83? I mean, I think that this lumber news might help them a little bit, but you need a few quarters to burn off and to get the demand back and to burn off the supply. But that's a really good buy, buying it right now.
All right, we're going to leave it on that note there. Greg, thanks as always for joining us. That's it for us here on The Street. Thanks to Greg Newman, Senior Wealth Advisor and Portfolio Manager at the Newman Group, Scotia McLeod, for joining us today. Andy's up next with the Open. The markets will open, well, at least here in Canada, in a little over 30 minutes from now. Have yourself a great day.